Hi, everyone. Welcome to the SoFlo Real Estate Show. Ask Athena and Julie Anything, the go-to podcast where we answer all your burning questions about all things in real estate, especially here in South Florida. So whether you're a first-time home buyer, a seasoned investor, or just simply curious about the market, we are here to give you expert advice and insider tips. My name is Athena Chalikas Barocas. I'm an award-winning realtor here in sunny South Florida. If this is your first time in the podcast, remember to subscribe and like the most recent episode. In today's episode, we will be unveiling the hidden costs of buying a home in South Florida. My co-host, Julie Dinda of Radius Financial Group, is here, and she's ready to dive into the topic and help us navigate the home buying journey from the time you move in Weston. So welcome, Julie.
And I'm Julianne Dinda. I'm your go-to lender. So today we're diving in on a crucial, a really crucial topic for all prospective buyers in South Florida, the hidden cost of purchasing a home.
That's right, Julie. Beyond the sticker price, there are several expenses that catch a buyer off guard. You and I have seen this many times by working with other lenders, and then we get our client, they're like, I never knew I needed this much money. So today's goal is to shed light on all these costs so all of our listeners and home buyers are ready to really dive in and buy their home of their dreams in 2025. I am super excited.
Oh, yeah, definitely. And before we get started on today's topic, let's review a couple of those big purchase hurdles of 2024.
You know what, Julie? That is a great idea. 2024. I think before we can get to 2025, we really need to stop and look at 2024 and say, what the heck happened? We had the biggest stalled market. It was a more stalled market than when we had the crash in, back when, decades ago. But this was the first time I would say in my 20 plus years in real estate and selling homes that I have seen a market so stagnated that nothing was really going on. Sure, homes were selling, but not to the degree that we expected. So yes, I love it. Let's review 2024. Where do you want to start?
Geez, you're so right. I mean, we went on that interest rate journey from free money to essentially pretty much knocking at 8%. So let's start there. I think that's where everyone wants to start. How did it do all that?
You
Crazy.
know what? That's a great point. I mean, that was almost a straight line overnight, and it just kept going up and up and up and up. And that was a really hard time for everybody. Tell us a little bit about that. How did we get from free money to 8%?
And I think one of the things last year that was so crazy was the year before we were like, wow, we're high. We're at 7%. How could we ever get any higher? And you and I, talked about it, that's way below, the normal, like over the past 30 years where the interest rate's been. But I think because everybody saw that 2% and that 1.5%, and, you had people coming into the mortgage industry that really had never been in it before, the cash buyers, the people that had cash, they were like, why in the world would I use cash when I can do a loan for 2% and use my money to make 7% in something else? So you had everybody getting loans, and then you came to this kind of, stagnant 6% to 8%. It never really went, a couple of times it went to a little below 5% this year. But for the most part, it stayed very consistent at about 6.5, 7%. With people that had issues with their credit knocking at 8 and 9%.
Yeah, no, it was a real hurdle last year. I think, and you let me know if I'm wrong, but as I'm reading, most of the analysts are saying, you know what, we're going to be somewhere between that mid 5 to mid 6, maybe higher on to the closer to the 7. But that's where the interest rates are going to keep, kind of bouncing back and forth. Is that what you're, expecting this year as well?
I mean, those 2 and 3% were unicorn years. I mean, those were just, let's try something, throw it into the market, see what happens. You never know. I know we're going to probably get into this in a little bit. Let's just jump to it now. With the U.S. elections, back in 2020, we had we had the pandemic, we had a new president, we had all of this stuff, and we were trying all these new things that were trying to help stimulate the economy. And people are just waiting for that to happen again. But nobody wants that to happen again. Nobody wants to be in a place where everyone was so afraid and what's going to happen and what in the world can we do to keep now it's back to, I mean, 5.5 is a great percentage. 6.5 is wonderful too. So, I think people just keep thinking of 4 and not thinking of getting into homes. And that's a little, at the end of the day, 7% is over the past 30 years, very, very low.
Yeah, it's a normal rate. It's a normal market rate. And you're
Right.
right. The election kind of threw everybody into stagnant mode as well. Realistically, why we're not ever sure, but an election year always takes a pause in the real estate market. The other thing we had was an increase in home prices. Now, we didn't have a trajectory like the unicorn years, 20, 30, 40%. But that 4 to 6% that we did experience in 2024 just added a little extra layer of caution for buyers out there. And so hopefully we'll be able to get past that. And really the increased cost was really due to the limited inventory, right, Julie? It's basic economics. Supply, demand, and price equilibrium, and that's where we were.
Yeah, well, and that's what happened. The same exact thing that happened with the interest rate came with the home prices, where people were like, "Oh, at 2%, I'm buying this year," and it's like, "Well, at 2%, I'm selling this year, but I'm not selling for anything less than this." And now people again were not in those 2% unicorn years, but the home prices, they're like, "Well, I'm not selling for less than this," and people are like, "Well, I'm not buying for that much." So
Yeah.
at the end of the day, like we kind of hit that as well. That's what we were seeing.
Yeah, no, I agree. I agree. Those are the four. The interest rate journey, the increase in home prices due to the limited inventory, the U.S. election. And the last one I'm just going to throw out there was that we have on August 18th or 19th, we had the NAR settlement where buyers now have to hire a realtor in order to, look at a home and go through their journey. So, those were big. I'm sure those are four big is what I meant to say. Those are four big hurdles to overcome in 2024. But I'm like, let's look at 2025 and moving forward. The housing analysts are predicting a year of stability with interest rates, with home prices, and we're going to have the continuation of the buyer broker agreement. So, I think January is really a good time for buyers and sellers to start preparing for 2025, start preparing for their real estate goals, and really talk to the lender they trust and the realtor they trust in order to come up with a plan for this year.
Exactly. So let's get started.
Okay, let's do it. Let's go over the top one. The number one hidden cost, and this one comes up all the time, is closing costs. So, Julie, tell us a little bit about closing costs.
So closing costs there's so many different aspects of a closing cost. So you have your down payment, which everybody knows about. So that's what you've been saving for your whole life. Other closing costs that you may not really understand that you have to do is your insurance. So when you purchase a home in the state of Florida, you don't actually own that home until you pay off that whole home. So who owns the home? Whoever your lender is owns that home. And at the end of the day, we're going to protect our investment, which is that home. So essentially what has to happen is you have to get insurance. And we want that insurance a year in advance. Same thing with Uncle Sam. Taxes, right? Everybody has to pay taxes. And what does Uncle Sam want? A year in advance. And the reason that you want these things to happen is just in case something happens to you, something happens to your job, and you fall behind. Okay. You're gonna have a little bit of a grace period for you to be able to like get a new job or heal from that, hospital visit or whatever it is that's keeping you behind. Because if you run late on your taxes, Uncle Sam will take that house so quick. And so you want to make sure that you're ahead of your game. Other little fees are going to be your title fees, your recording fees. Have to pay your attorney. You have to pay your title attorney to make sure that that house that you're buying doesn't have a long lost cousin Earl that also owns the house that can come after it in 10 years and knock on your door and be like, hello, I'm Earl now. You got to make sure that you hire a title attorney to make sure they do a title search and you got to do the paperwork. So it's a lot of different hidden costs, but we find all those costs out immediately. You're going to know what all that is immediately. Right at pre-approval. We're going to give you a heads up of what's going to be expected of you at closing.
Yeah, no, absolutely. The hidden costs are huge. And, I don't know why it's always a surprise. Maybe we need to be better at communicating it like we are today, right? The better at communicating it. I always tell my clients, look, when we sit down for the first, initial consultation, what are we going to expect? One of my slides in the deck is closing costs. And I say 3 to 5% is what you need to do. So, we have a house. The average sale price in Weston is about 700, right? So 700 times 5%, Julie, is what? 35,000, right?
Correct?
Yeah. So you need to have 35,000 put away so you can have the closing costs. And it is what it is. And that's outside of your down payment. So, it's really, really, really important. So 3 to 5%, I always go on the high side because you just never know what might happen, what you might need to do. You may even need to want to make some repairs right away once you get the home, so you have a little extra money tucked away. But the hidden costs, Julie, you said something that was kind of intriguing, and I kind of want to circle back. You said you paid for housing insurance and housing property taxes a year in advance. So that's a really interesting way of putting it, is what happens if something happens and now you have already prepaid those monster bills. So I appreciate that, Julie. I never quite heard it that way.
Yeah, it's just a great way to think about it. It's just because sometimes yeah, you also have that flood insurance that people are like, I live by a lake. Why do I need a flood insurance?
And
And,
I say,
those
well, you live in Florida. It's swampland
exactly,
everywhere.
exactly. And, that's going to typically cost you around 700 to 900 per year too, now that we're talking about the insurance as well.
You know what? That's a great point as well. Flood insurance last year until October of 2024 was, you could choose to do it, right? It wasn't obligatory. The lenders didn't force it upon anybody. And it was about three to $400 on average for a policy. Well, October, it became a mandatory piece of insurance policy that you need to hold. And the insurance policy now is, what do you think, Julie? About $700-800 per average per home of the number,
Per year, correct.
per
And
year.
and that went up actually a little bit because in years past, FEMA used to be in the entire country. So every single person would pay like $100, $200 a year. Well, people that were in I'm thinking Biloxi's actually by the water, so that's not a good example.
Yeah.
North Dakota. I was like, I remember it being in that casino. No, I'm just kidding. But when you're up in like North Dakota and you have no water anywhere within you're in Albuquerque, New Mexico, and tumbleweeds are going by. That's how much water you don't have. People were like, why am I paying $200 for someone on the beach in Florida to have a cheaper flood insurance policy? So it kind of went into law that we
Yeah.
in Florida are a little bit more. Now we have to pay more than the average.
Yeah, no, that's true. That's true. It's this cost of ownership. And that's why I'm really glad we're doing this podcast today. Another fee that I wanted to bring up is the appraisal fee.
Yeah.
This one always catches our customers by surprise as well. And the appraisal fee is a mandatory fee that a lender charges in order to verify the value of the home. So, Julie, what is an average appraisal fee going for in 2025?
And that's kind of based on your home as well. It's based on your location. Obviously, it's based on how big your house is. You have a one-bedroom condo, your appraisal fee is not going to be as hard. It might take the guy 45 minutes. Now you have a 5-bedroom, 3-bath with a pool and a half acre in Weston Hills. You may have someone over there for 3 or 4 hours. So you can go anywhere from $250 up to like $750. if you want to go a little deeper, sometimes clients want the appraiser to go in a little more, like, can you make sure you're testing for all these things? You can see it anywhere up to $1,000 in situations like that. But it's
Good to
crucial.
know.
You need to know what you're buying, at the end of the day, and that's why the lender will make you do that.
Yeah, and as the agent that supports buyers as well as sellers, on the buying side, it is important because you don't want a buyer to overpay what, is considered, somewhat fair market value. I'll put that in quotes because it's really the lender's appraiser that's determining that. But we're very close on the real estate side when we're starting to look at the comps and the trends in the market, etc. Buyers are overpaying or putting more above what the average price is. Then, it's up to them to really understand, the buyer to understand, is this a property they want to move forward with? And if they do, what is the added cost to doing that? And so an appraisal is always, always a good option for a buyer, regardless of the cost. It's a good option to have. Hey, so let's talk about title insurance. We did that a little bit. You talked about Uncle Earl, but this is a real cost. I've seen it not in my transactions, but I've seen it in the industry as all of a sudden somebody owns something and something comes back years later and they have to go back to the title insurance policy to have it remedied. But there are things that happen over time with recording and the chain of title. Julie, can you talk a little bit about that?
Yeah, so so the chain of title is very important, and you need to have title insurance. I know we have all these different insurances, but it is important because there is a way of someone coming back. Maybe a great grandmother left, someone out of the will or put someone in the will, but they decided to go tour the world and not let anybody know where they were, and then people hadn't heard from them in forever. You need to know that Earl needs to know that he gets a portion of the sale, because if he doesn't get a portion of the sale, then technically the house will belong to him. And if that does happen, that title insurance protects you. So either they pay off Earl or they give Earl the house and they give you money to buy a brand new house. So there's a lot of different things, but you definitely need that. It's important to have that attorney in your corner in those situations. Rare, but they happen.
Yeah, there was an example. I was talking to a friend who bought a piece of land, right, up north in North Florida. And they bought it on their own. It was a for sale by owner, which is fine, right? This piece of land. They built a little house on it because, it was charming. I think it was a few acres. Oh, listen to this, Julie. All of a sudden, where they had this back area, they were doing some gardening, planting, like an organic kind of planting, farming area for themselves. Somebody came back and said, oh no, that's my land over there. And it was their land. They're in dispute. But no, the grandmother had given them the land. This person had paperwork on it. So I don't know what they're going to do with it. They'll probably sell it, whatever. But the point to your story is, yes, people do come back. Yes, they do have some type of legal right to it. And, the title insurance, and I do hear customers say, oh, I don't want title insurance. It's optional. It's optional, but why would you opt out? I don't understand it. So we always recommend get the title insurance paid for. It's really a peace of mind and it protects your chain of title to protect you in case, like, Uncle Earl, as Julie says, might come back and say, that's my land.
Yeah. Yeah.
That's never a good thing. Never, 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 never. Some other things we have are just small ones, but there's loan origination fees, and that's something the lender is going to disclose up front. There's recording fees, and those are standard because somebody has to record the deed and go through that process. So, there's going to be a lot of little fees. But I think, Julie, you and I went over the major fees and what a buyer should really, really prepare for and understand as they move through the closing process. Is there anything you wanted to add, or you think we're good
Yeah,
on
I,
that?
I think the only other thing that I really didn't, I know we briefly talked about the maintenance and the repairs, but to just kind of go into that a little bit, you might have your roof
Sure.
repairs. So that's going to ensure that your roof can withstand those tropical storms that we get. You got your HVAC maintenance, which is keeping your cooling system. Trust me, you need that efficient in the heat. And then pest control. termites, pets. I mean, you definitely want to have that little bit of, stuff that you're gonna need, which is kind of, it keeps essentially, owning a home means being prepared for both the routine upkeep and then also those unexpected fixes.
That's, yeah, absolutely. Absolutely. Maintenance of a home, a lot of sweat equity and a little bit of checkbook.
Yeah, exactly.
Oh my God. Let's see. We talked about flood insurance already. I was just going through my checklist and we talked about how important it is. Let's talk about property taxes now. Um, and go into a little bit more in depth. There are property taxes, but the one thing nice in Florida is we have a lot of exemptions out there. And, I always recommend, Broward County, Dade County, Palm County, go on to the appraisers website and see if any of these apply to you. When you're buying a home, though, this is where I want to go, Julie, is I want to caution our buyers in making sure that they understand that when they're getting their loan, what the current taxes of the current homeowner looks like and what they can expect the following year on their tax bill. I've noticed that there are some lenders out there, not you, because I wouldn't work with you if you did this, but there are lenders out there that will qualify the buyer on the current homeowner's tax base, which I understand, but not inform them. And this is where it gets tricky, is not inform them of what's going to occur and what the tax burden is for the purchase of the home under their ownership. And I really want you to dive into this, Julie,
Yeah,
for
I was
us
gonna
and
say,
make
let me
sure it's
dive into that.
crystal clear.
Yes, let me dive into that and explain what you mean by that and what that is. So when you purchase a home, so let's say, Mrs. Molly and Mr. Market, they bought a house back in 1950, and they've lived in it their whole entire life, and they've never done anything to it, and you are lucky enough to buy this house that's never been owned by anyone else before. Well, their taxes are going to be extremely, extremely low because when you're secured in your homestead property, you cannot go up by a certain percentage. Your property taxes will only go up by a certain percentage every year. So now if you sell your house 15 times and now it's the key to the market and you can be paying 7, 8 thousand and your neighbor that's been in the house the whole time maybe he's only paying 3 or 4 thousand a month. And that's just because it's been one owner. You haven't been able to pay the market value of it moving around. So what happens is you come into the house and when you purchase the property, you're paying their taxes till the end of the year. So what that means is when you purchase the property, you're being approved for the 3 to 4 thousand. But when you buy because you're a new buyer, your real taxes are going to be around that 4 to 5 thousand a year. And so what happens is people, lenders, when they're just trying to like get the fast sale or whatever it is, they leave that part out. So now when your property bill comes due the next year, because you're not paying Mr. and Mrs. These, taxes anymore, what happens is you get a nice hefty bill or your mortgage payment goes up by 5, 6, 700 dollars a month. And that's what she's speaking on that. That's why it's significantly important to be with a lender that knows what they're doing and that really truly genuinely cares about the buyers and what their journey looks like and hopefully getting future business from them, so we keep you in the loop, keep you informed and let you know what's going on.
Yeah, no, it's a significant hurdle. It's a significant hurdle. Not all lenders do this, but there are some out there that just simply do not inform the buyer of really what the true status is. The one thing I tell my clients is property taxes. I know this is higher than the normal, but I'm always on the high side. I said, 2%. Whatever your purchase price is, it's 2%. It's going to be less than that, somewhere probably between 1.7, 1.8. You get your homestead exemption. There's ways of reducing it, but plan on 2% because there are a lot of homeowners out there that are original homeowners. I mean, in our neighborhood, I can't tell you how many people are original homeowners, right? And it's really important that we understand the tax implication and what that tax implication is going to look like for you as a buyer in the next year. And more importantly, can you afford that $500, $600, $700 more a month? And if yes, go for it. If no, let's find a different home. Let's find a different location. Let's have a different strategy. But Julie, I appreciate everything you do. It's not an easy conversation to have, but boy, oh boy, is it a necessary conversation to have. So that's really good. And then, the other thing is if you're purchasing new construction, the initial property tax assessment may be based on the land value only. So again, this can mean a significant increase in the overall property tax when it becomes due. So again, it's so important to work with a realtor and a lender that's going to guide you properly throughout the whole experience. But now we're moving on to HOA. The HOA in South Florida is a very real thing. Now, there are some cities that there's minimal HOA, it's homeowner associations. And then there are some areas that are heavy in HOA. If you look at the city of Weston versus Cooper City, for example, big difference. Condos, all the time, all day long, you're going to have an association. You're going to have a condo association. Julie, do you want to talk a little bit about the HOA fees? I think we lost Julie there for a moment. So, the HOA fees are going to be different for different associations. And they can range from here in West Broward, anywhere between $200 and $600. If you're on the beach, you're going to look at a condo association. It's going to be over $1,000 a month. What they typically do is they cover amenities, they cover costs to repair capital improvements within the community, they cover the common area, sometimes utilities, sometimes different trash, perhaps it might even cover landscaping. But each HOA is going to have different amenities and different costs associated with it. So it's important to know what those costs are and what they cover. So again, you can properly budget for those. And the other thing that Julie talked about a little bit was maintenance and repairs and owning a home and updates. Create a budget of what might become due. A roof is about 30 years, 25 to 30 years. Make sure the age of your roof. Make sure you're repairing it every year. If you have a broken tile, repair that broken tile. But you want to make sure that, you're preparing. The other thing is an AC. An AC's life is about 15 years. So if you're looking for the AC, if you're that time frame, you want to prepare to make sure that you have funds put away for that new AC. And if you're in a 5-bedroom home, how many ACs do we need, Jolie? We need 2 ACs, correct?
At least.
So, that's a lot. Yep. Hey, welcome back. We lost you there for a hot moment. I was just talking about what we were talking about the other day, and what you had started about was preparing to make sure that we have money put away. So Julie and I recommend if you have a home about $350,000, you're putting it away somewhere between $3,500 to $10,000. If you have a home about $700,000, you want to make sure you're putting about $10,000 to $20,000 away each year, just to make sure that you have money put aside for those unexpected maintenance needs. Here in South Florida, another cost could be pest control. Now, you might want a quarterly pest control. We have all kinds of animals and insects. So regular maintenance of your home also preserves your home, it preserves your asset, and it really makes sure that, you're prepared for anything that might come your way in the year 2025 or beyond. So again, purchasing a home, what a significant investment. What a good way to have a life, though. You have kids, you have family, you have community. But be aware of the hidden costs as well. Make sure you're financially prepared so you can enjoy your new home without the stress of the unknown. So anyway, we hope this discussion has been enlightening. If you have any questions or further assistance, reach out. Julie and I are always here to answer questions, and we would love to be your go-to realtor and lender here in South Florida. Please remember to subscribe and like the video and our channel. And we thank you for joining the SoFlo Real Estate Show. Until next time, take care, everyone. See you soon.